With the Democratic control of the House right now, obviously a lot of the talk is stalled about feasible, tax cut 2.0 or anything like that. What is the administration's economic agenda on a going forward basis that's actually, practically possible?
Well, look, the president has said that he is more than willing to discuss, negotiate, talk to Ms. Pelosi if she becomes the speaker and so forth. He's willing to reach across the aisle. On the other hand, if they are more belligerent, then he will fight back. He's very clear about that in the press conference last week. Regarding our policy goals, we will be looking at additional tax reform, 2.0, if you will. There are other things. We're noodling inside the administration. We're working with the House and the Senate. Senate, by the way, is a very powerful body, so they're not going to let our tax cuts and deregulation and energy reforms be overturned. And if they were, the president would veto it. So I don't want to get ahead of our story. We're going to have a very tough budget, as you know, a 5% reduction across the board for the domestic non-entitlements. I think that's very healthy for the economy. We're looking at infrastructure in many different ways. The president, former construction man, real estate man, infrastructure. Right. We are working on the National Economic Council, the NEC. I'd like to do energy infrastructure. I'd like to do pipelines. I'd like to do anything that will help LNG, terminals, shipping. We'd like to revise the U.S. shipping industry, which has been dormant for many years. We'd like to export oil, nat gas, LNG to Europe and to Asia. Those are very important issues. My conversations with European leaders, they want LNG. They want it badly, right. And we're going to do whatever we can to accommodate.
Larry, final question here. I want you to indulge me, sort of take us back a year or so when you and I would typically be talking before you'd be coming on, and you'd say, what's going on this morning? And I would say to you this morning, if we were having that conversation, well, the market's worried that Powell's going to keep tightening to at least neutral. People are worried we're going to 25% on these tariffs on China. Earnings were pretty good, but guidance wasn't quite as good, and people seem to be a bit more scared in the market right now. Your response would be, if we were having that conversation, what?
I would say corrections come and go. I mean, it's been a long bull market. We are way ahead of where we were in late 2016 after the president's election. The market's done very well. We've had these corrections. You had one last winter, as you know. We're going through one now. I believe, at least at the close of business yesterday, the overall correction was 7%. I don't like that. I don't want anybody to ever lose money in their 401ks. But historically, as you know, that's a rather mild correction. So I think the economy is very healthy. I mean, I think profits are strong. You had a tremendous NFIB small business confidence number today. You had a good Conference Board consumer sentiment number. Profits continue to rise. The ISMs are very strong. I mean, I think this is a very healthy economy. The story here, in my view, everybody said we could never get 3% plus growth. We're getting 3% plus growth. And the tax cuts and the deregulation, the energy, the trade reforms, pardon me, I just think it's all paying off. And I think this is the best economy in years. So I remain optimistic, David.